All right, we are live and we're just waiting for the announcement in about 5 minutes. So we'll let everybody gather in. And if you can hear me okay, give me a thumbs up in the chat. And we'll talk you guys through the announcement. We'll read off the initial headlines, which will come in at 2 p.m. And then we'll wait for the presser at 2:30, which is where all the meat and potatoes are. And we'll see how the market reacts. Hello, The Quest. Thanks for joining us. I'll place the FOMC level once we get the FOMC 2 p.m. print. We'll place that there. And the reason why we do that is because quite often that becomes a critical level in terms of what the market does in reaction to the FOMC. So in very simplistic terms, if price is below the FOMC announcement level, then things are bearish, and vice versa. If we are trading above it, trending above it, then things look bullish. Once we get the first 15 minutes in, we'll kind of look at that range, and that's kind of be like the range for this market to then break out of for a more sustained move. But the first few minutes after the announcement is usually somewhat noisy. The presser will give us the final direction for the most part into the end of the day. And then at that point, whether you're above the announcement level or below it, that's the bulls or the bears' job to defend over the next 24 hours or so. Should you lose that level one way or the other after today, that would mean that the trade direction is likely going to shift in the way that it breaks down or breaks up for a few more days. We are in an OPEX week this week, and typically when you go down into an option expiration week, which is on Friday, a lot of times it's, first of all, it's kind of rare to go down into OPEX week. Most often we're going up into OPEX week outside of a bear market. So it's a little bit of a rare exception here. But when we do go down into OPEX, sometimes we don't finish off the down move until Friday. So that's something to keep in mind as we go through today. Bitcoin was sneaking up basically since yesterday afternoon in a pretty one-sided move, which is a little unusual for Bitcoin. It came up, grabbed the Monday high, which oftentimes it does. It'll come up after the Monday's range is established and take out the Monday low and then take out the Monday high. So it actually did both. So it did a pretty good job of clearing out stops on either side of that range. It is trading currently below the monthly open, which is, if you're bullish, you want to see that level hold. So really going to come down to what Jay Powell gives us in the next half an hour or so. So let's see what we're expecting no change to the rates, so they'll hold again. And anything outside of that would be a big surprise for the markets, but I do not think the Fed is in the mood to be surprising the market. So we'll look for no change to the federal funds rate, and then we'll see what the comments are off the 2 p.m. announcement. Hey, Michael. Hey, Charlie. Lana. Knocking all night. Denver Rick. Amucalyptica. Thanks for joining us. Bob, I can't hear you.
I said, hey guys, I'm going to probably keep the video off because I'm going to be looking sideways. I think you get tired of looking at my ear. So, but I'll take a portrait and put it up there for you guys in the future. I will say though that I bought 563 calls here for 470 or 3, whatever it was. Here, let me look. About 10 minutes ago. March 20th, 563s for 370. So we'll see. We'll see what Jay Powell says. It's 11 o'clock. So do we get any reaction here?
All right. So initial reaction from Bitcoin is up, and also the market is up a little bit there too.
Boom.
Of course, usually the first reaction is not the correct reaction, so we'll see what shakes out here over the next 15 minutes.
Yeah, I'm going to put a stop in under my my calls are up $600 already. So
all right, so we will put the FOMC announcement level there, and currently bulls have the edge unless that stops holding there. So we'll see what happens.
all right.
We're above the daily 5 EMA and sandwiched between that and the daily 9 EMA. And the SPX has a weekly 50 here as well that we've been chewing on and battling against. So again, the Fed holds the rates. Fed sharply reduces 2025 growth projection, marks up inflation.
Okay.
We may get a hawkish Fed today.
Just so everybody know that I have my stop set in at 440 on my calls I just bought. So just so everybody knows that. And I'm out. So quick $500. Since I don't trust the markets anymore. $570 profit. I'll let you know if I get back in. Now I'm gonna look around, see everything else is doing. And just remember, guys, you make $500 a day. It's $120,000 a year. So you don't have to swing for the fences. Okay.
Beginning in April, the Fed will slow the pace of the balance sheet runoff. That was kind of the chatter prior to today. That's how weak things are.
Wow.
Fed says uncertainty around economic outlook has increased. The dot plot, which is the Fed's kind of survey in terms of their expectation, FOMC median forecast shows a 50 basis points of rate cuts in 2025.
Those that joined us on the SVIX trade this morning, or the UVXY puts, they continue to be supported.
BTC ran up, grabbed some stops, and back down. So it really comes down to, for BTC, over the monthly open. I think if that holds, then probably they're going to try to push it up. If that doesn't hold, then a lot of what they did overnight, this whole run up, could start unwinding. So we'll see how this plays out. Not a huge reaction from the announcement. So I think a lot of this might start holding until we get into the presser, which will be in about 15 minutes. These reactions have been getting, in terms of range and size and volatility, after the initial announcement, have been getting smaller and smaller over the last few FOMC announcements. When they first started cutting, they were like really, really volatile. FOMC median 2025 unemployment projection rises to 4.4%. So that means we'll probably hit 5. Fed removes roughly, what did it say here? Fed removes language that risks to inflation and employment are roughly in balance. So we're getting a lot of noise here. You're seeing the up and down. This is a 5-minute chart. BTC pushing lower here. We're getting a little more clarity on the reaction here. Obviously we've bounced up into the FOMC. So if it's a move up into a news announcement, you got to watch for the sell the news event. So again, we're just going to wait for the Fed presser. If you guys got any questions, go ahead and post them in chat. But right now we're pretty much back to the FOMC announcement level. So we'll see where the trend develops as Jerome Powell starts to talk. So really illiquid, volatile movement right now. There's really nothing to glean from this. This is just algos basically smacking each other around. These are 1-minute candles, and getting 10 points in a 1-minute candle is not normal. So just a lot of digestion and positioning around what they've given us. So basically they're saying 50 basis points of cuts, and so that would imply that probably don't say anything until Q3 for cuts, unless unemployment jumps up. They are a little more hawkish or bearish on the economy in terms of growth and uncertainty, and expect unemployment to continue to rise. So I think the Fed is trying to, and I think they're working somewhat in concert with the Treasury, trying to get things to slow down, and hopefully what they're going to see is yields will come down. Recession trade usually puts people into bonds. Buying bonds drops the yields, and so I think that's like what they're trying to do. We look at the SPX, which is the index itself, and we'll look at a daily chart here. A lot of times what you'll see is, if you have a sizable pullback like we saw, we had 10% pullback, right? when you and a lot of times they'll break the weekly 50, but you'll notice we're kind of balling up under here. So it's really important that this doesn't break down and start cracking new lows, because if it does, we could end up down here at this 5300 level ultimately. This here is, if you look at the daily chart, it looks like a bear flag, right? So if you look at this formation, you kind of have this bear flag forming, and that's always the risk, is that you have that breakdown. So it's really important for the bulls to get over this 200 weekly moving average on the SPX. So that is the important level from today that needs to either break the upside, or we start breaking down out of this bear flag and we see lower going into Friday probably. And I have that weekly 50 level marked off here. We're right back to it again. So we've been up, down, up, down, up. And so this is really just ultimately going to be about what he says at the presser and the market's reaction to it. Sarah, they did not cut. Nothing got cut. They're looking for 50 basis points of cuts in total for the rest of the year. So one thing I've noticed this morning anyway, and again, the real move doesn't happen until he starts talking at the presser, and there's going to be a lot of wild reactions off of that. But the weekly 50, every time we've pressed up into that, they've pushed it back down. So we call that distribution. So, and again, we're in a bear flag. So, you have to watch for this to fail, right? Because the risk would be then we really start peeling off. The overnight low is down here on the futures at 56.57. And if we do start cracking below the FOMC announcement, that's probably the next target down below. And then yesterday's low during the regular trading hours was down at 56.50. And that level has been tapped a couple of times here, right? We were trading it at that level here, trading at this level, at that level here yesterday. So if it goes down there again, probably not good, probably going to break down. But again, can't really say for sure what's going to happen until the press conference starts and we start getting the reaction from the market based on what Jay Powell is saying. But right now, bulls are in control because they're just pushing back up to levels that we were at previously this morning. And again, to me, it's about whether we get this breakout over the SPX weekly 50 or not. To me, that's going to help negate that bear flag that we're in. So we could draw bear flag. We'll see if we break out of that one way or the other. Yeah, in terms of the indicators, our primary one is the histogram. So what it is the histogram itself. We're looking at this on a 5 minute chart. So the histogram itself is the green and the red bars down here, which are indicative of the trend. All right. So obviously, on a smaller time frame, you're going to have a lot of trend changes, or at least directional changes, right? But that's your direction. So then what you have is the trend change line, which is the thinner line. So it kind of rotates around, kind of like the moon around the sun or the Earth. It rotates around the trend, right? So if you're in a condition where you have a green histogram, right, and then you get the rotation to the bottom. So this is limited to a reading of -4 and +4. Okay, so if you get like the lowest reading -4, condition is green, so that puts you in a pullback, right, and a move up, and then you get that basically a snap back up, and you make a new high. So that is how you look at this indicator and look to take trades. So if you're trending in one direction, you get a pullback in the trend. It hits that -4. You take the trade, go long. Or you can also, if things are trending on the histogram green on a higher time frame, for example, then you know that you could probably jump into any kind of pullback on a smaller time frame and join that trend. So basically, it's just kind of a easy way to say, hey, the move is up. I want to buy a dip, and the dip indicator would be that red line, or that or the thin line, I should say, because it can be red or it can be green. Yeah, Nitro. I think at the end of the day, they're going to try to hold as long as humanly possible here. But at the end of the day, the Fed bends the knee to the job situation. So once jobs and unemployment start getting higher and higher, and the unemployment rate, I think once you start getting into that 4.8% unemployment area, that's for sure you're probably going to see a cut or two, and probably at that point we'll be in a recession type environment, and typically there's just going to be cut after cut after cut after once that starts. I highly doubt we'll see another pause. The weird thing about this situation versus like our last two major recessions is that all of a sudden now inflation is an issue, and so this is why they've been pausing and they've been hawkish in terms of what they're going to do to accommodate any struggles that the stock market might encounter. The fact that they have to even intervene in the markets at all is doesn't bode well for the strength of the market, right? If they didn't have all of the bad assets and we're still talking about bad assets from the great financial crisis, right? They still hold a lot of mortgage-backed securities and things like that. I mean, that just tells you how not great of a shape things are, because without them, basically, it would be like if you were trading and basically everyone just said, well, we'll take all those bad, excuse me, all those bad trades off your record and give you back your capital, right? I mean, who's going to fail, or who's going to be responsible when it's like that? That's the problem with when the Fed gets involved and bails the markets out. There's no consequences, and it kind of reinforces bad behavior, in my opinion. So once again, the bulls have to hold above the weekly 50, and will they here? We'll find out. We got another 12 minutes to go. Let's see what Mr. Bitcoin's doing. Same thing, kind of back toward the highs. Monday's high has to basically break out of Monday's high. If it doesn't, then like I said, there's a lot that can unwind from this one-sided move up. So for me, Bitcoin here is either, we're going to get one of those big days. Maybe we'll get a $10,000 range, right? Or, it gives back and it's a sell the news event. Bitcoin normally trades a little more up and down than this. This has been pretty one-sided for Bitcoin, the way it usually trades. So kind of suspect in how it was pushed up into the news event. So that's my one concern there. But like I said, otherwise, if things start going hard, then yeah, it could be a very big upside day for Bitcoin and the markets as well. Because once we clear the weekly 50 on the S&P 500, we start looking towards, well, we can go look at the levels here. Let me bring up the chart. Once we clear the weekly 50, you have the 200-day moving average is the next big one I have. And then we start running into the 20-day moving average. And then this blue line is the other bigger one, the 144. The 20-day, now that it's moved down under the 144, which isn't bullish, by the way, this is probably the area I would look for an initial reaction if this should push up and if this should negate the bear flag, right? That would be, so that's another 160 points higher. But that's a big if, right? We got to see the reaction off the presser, and we got this 50 weekly moving average capping us. But any moves under the 50 weekly are pretty rare for the S&P 500, right? The last time we saw that was this dip we had back in October of 2023. We spent a few days under that, and it was pretty much a V reversal out of there. And then if we go back, you can go all the way back to the end of 2022 when the Fed took away the punch bowl, took away the liquidity, net liquidity dropped a whole bunch, and we went down to the 50 weekly. We had a few wicks under it on the daily, and then we had that bounce up. We got up to that 20 period moving average, ultimately ended up basically selling off from that level all the way back down and making new lows. And that's how the beginning of that bear, I don't know if you can call it a bear market, but it was definitely a bear market for about 8 months in terms of the price action. And then so it's important that you don't lose that initial loss of the 50 weekly. I will say this loss of the 50 weekly is a lot weaker than what we usually see. Usually price doesn't spend a lot of time under it, and I would argue that we're spending a ton of time under it right now, relatively speaking. So it's still, bulls are not out of the woods yet, but there's a chance that changes today. So we'll see. That's why this next hour or so reaction, or next 24 hours in total, are going to be really, really important for the next couple of weeks, I think. Yeah, the TLT ratio on if you look at the TLT divided by the SPX, you look at that ratio, it's actually starting to break out, which is something we look for that indicates that we might be going into a window of weakness where, and that's really the start of a recession trade. So if you look at, and we can bring that up here while we wait, TLT SPX, that one there. Okay, so we can look at this on a monthly chart even. So you typically see a downtrend, right? Because more often than not, the stock market's going to rise against something like TLT. Now, TLT is representative of the 20-year treasury, right? So in times of distress, people pile in the bonds, right, and get out equities. So like from December of 2018, there was actually a trend up, which culminated into COVID, right? And that ratio spiked. And so what we look for is when the trend appears to be shifting. So you can see all the moving averages are down. We're getting a little bit of a bump here. But if we start seeing a move that looks something like this over the next few weeks, okay, that's an issue. That probably tells you maybe we got to start to a recession trade going on. Okay, so it takes time to pan out. But this trade will last for many, 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 many weeks when that move does change, because this going down is normal operating procedure, right? That's the way the markets typically are plumbed. The TLT ratio going up is very abnormal for the most part. Here, where you see this big spike, that was the great financial crisis. Okay, so you got to pay attention when this starts moving up on the higher time frames. So this is what we're looking for. We're not quite there yet, but it's definitely pushing up a bit more than normal. And if you look at the TLT chart, like there's a lot of institutional volume that has taken place. If we go down to a weekly chart, a ton of institutional volume has taken place. I mean, let me switch to the TLT chart actually for this one in this zone. So the TLT chart's been basing, right? So the TLT chart's holding. The reason why that ratio is spiking up is because the S&P 500 has pulled back 10%, whereas the TLT has basically been holding this range. But this price action here is basing, right? And there's been a ton, if you look at the 2024 action, there's been a ton of institutional volume in here, big order sizes. So to me, it feels like they're buying this in anticipation of this thing cranking up for a recession trade. So in the last time we had, these TLT can move a lot when conditions are bearish. If you notice, like when we got into COVID, right, big spike up. And, to me, COVID, I think people that knew there was trouble brewing were already taking advantage of this trade, because look at TLT started grinding up and then really culminated into when all the chaos hit with COVID, and then the Fed stepped in. When the Fed stepped in and said they were going to do, basically what they're doing is they're going to buy Treasury. So when the Fed announces that, you really don't want to be holding something like TLT, because they're just going to drive the price down on this, right? That's typically what happens. And then it's going to be, because what happens is the Fed's going to take that money, throw it into the stock market, and then this trade doesn't become alpha anymore. Going long stocks does. So we got about 4 more minutes, and then he'll start talking. So Wesley, yeah, the 200 weekly, that's really the one which is this guy down here, if I'm not mistaken. Actually, this is the monthly 200. If we're going into a bear market, like a true blue bear market, you're going to hit the monthly 200. All right. So don't be surprised if unemployment spikes, we get the recession, you're going to end up seeing somewhere near 3,000, because this is usually what I use for like a real bear market. That's the target. Now the 200 weekly, you're right. We bring that up here. This is where the 200 weekly is where bear markets begin. So you can see, like, the bear market is going, well, I shouldn't say where it begins, but that's when you're definitely in it, because the bottom will not come until we are well below the 200 weekly. So not only are you looking at getting to the 200 weekly, and you'll likely see a bounce there. That's really what saved us going into the end of 2022, actually. We had one initial bounce off of it. We had a giant dead cat bounce back to the 50 weekly, which is standard operating procedure in a bear market. We made a new low, but instead of going into a prolonged bear market, basically this ended up holding and came back above. So once you saw that happen, then it was like, all right, this isn't selling off like a normal bear market. And so that basically saved us. But normal bear markets, and this was COVID, that was really quick, with the intervention, so that you can't really, they just kind of basically band-aided over that, as unlike something we've ever seen before. So you can't really look at that too much, because that was just massive intervention. But the 200 weekly held back in the end of December 2018, because that was a pretty nasty drop. So that's the difference between a real bear market and then a deeper correction, right? To me. And you can see it's held, like, whenever you get down there, I mean, you're going to go long that regardless, unless the wheels are flying off because there's just total implosions everywhere. But like, if you look back in 2007, after you got that initial defense and it lost it momentarily a couple of times, rolled over, this is where the end of the bear market really happens and accelerates, really. So once you start getting this action and this acceptance under it, yeah, you're kind of running for the hills at that point. And TLT in this environment is just going straight up in the air. So we got a lot of air to come out of this market yet if we're going to continue to be weak, right? We haven't tested it, like I said, since the end of 2022, which was kind of the end of that bearish run. So, but if economic numbers deteriorate, growth deteriorates, this is going to come. Make no mistake. We got a bunch of unfilled gaps on the S&P 500 as well. All right, so we got another minute before Jay Powell is set to speak. Let's go back to our day trading chart. Again, the weekly 50, remember that? Important level, right? And they keep selling it every time we push up there. So let's look at Bitcoin. Same thing. I think the monthly open for Bitcoin is really important here. And again, essentially the same action, right? It's going up above these levels and getting pushed back. So ultimately, this is going to come down to what Jay Powell says. So once he starts talking, I will rattle off the headlines and we'll try to get a gist of what he's trying to say, right? Is it hawkish? Is it dovish? What's the market reaction? All right, he's stepped out onto the stage, and so he is about to start speaking, and we'll get some headlines here, and we'll start watching the tape. It will start bouncing around like crazy as he speaks. So let's see. I'm going to put this on the 1 minute chart just so we have as much detail as possible. And let's see what the reactions are. So the last thing we saw from the Fed off of the initial rate announcement was just that inflation's elevated. There's a lot of uncertainty and unemployment set to go higher.
All right, let me take a look too here.
All right, Powell says Fed made technical decision to slow pace of decline in the balance sheet. The economy is strong, labor market conditions are solid, inflation remains somewhat elevated.
Well, SPY likes it.
Yeah, so unless there's a big reversal here, this may negate the bear flag. We're not out of the woods quite yet, but pushing up over the weekly 50 like this is they're either going to do a quick stop grab and reverse this, or this is going to start taking off. So bulls, it's in the bulls court here. It's their ball to drop.
Yeah, I'm going to go back in long at 565 for Friday.
It remains to be seen how uncertainty will affect the outlook. Survey points to a heightened economic uncertainty. Recent indications point to a moderation in the consumer spending. The consumer is definitely dying. I mean, you have all these stores that are just not making it. Forever 21's in trouble. Joann's closing all its stores. And, you know, these guys all suffered through the last 2 recessions. So there's a huge, huge difference now.
I agree. You can see it. I've been doing some bank stuff this week, and I'm like the only one in the bank. Pretty scary. I went and bought some MicroStrategy shares too. I'm going to close my MicroStrategy by the end of the day, though, regardless, because I don't want to go into margin overnight.
The dot plot shows lower 2025 GDP projection than in December. So they're looking at a slowing economy. Core PCE prices probably rose 2.8%. That is what's going to prevent them from doing any kind of easing. They got to get core PCE down between 1% and 2%. So we're a long ways off from that. So when people are talking about, oh, the Fed's going to do some sort of easing, that's just not what they've been doing. It really revolves around where core PCE is at.
Yeah, and my view is that
we're dumping.
My view is that we're going to have the PCE number is going to absolutely keep falling because of they keep energy costs down, and so probably will manifest itself. Probably June or July, we'll see that PCE number down at the 1-2% level.
Longer-term inflation expectations are consistent with the 2% goal. Some near-term inflation indications have moved up, with tariffs as a driving factor.
So guys that followed us in the SCI trade that we got shook out of and we got back in yesterday. It's pumping. I'll be moving to stop up on that one.
So right now we're hitting our head on the daily 9 EMA. We have not been able to crack that puppy for a long time. If only briefly intraday, but we haven't had any daily closes above it. So like I said, it's the bulls. Bulls have the momentum here. It's their ball to drop. We're kind of at the top of that bear flag. From a technical standpoint, your risk reward here would be to be short or to step aside until this was reclaimed and then confirmation for higher.
I want you to be quiet.
Powell says, I'm focused on separating signal from noise. The uncertainty around policy changes and the economic effects is high. The new admin is implementing significant policy changes. The net effect is what will matter. Long-term inflation expectations are consistent with the 2% goal. So above the weekly 50 here is good. Below it, that might spell trouble.
I like to know what he considers signal and noise. It'd be nice to share, huh?
Dot plot is admittedly changing given the uncertainty. And again, the dot plot is just simply a survey of where people think in the board of governors for the Fed, where they think the rates are going to end up being as the year progresses. So they have their little dot plot of the expectations, and that's what they mean by that. Powell says we don't need to be in a hurry. We will await further clarity. So we're getting some pushback against the daily 9 EMA here. Let's see what Bitcoin's doing. Bitcoin's just stuck between the monthly open and the Monday high. That's pretty much where they ran this up and parked it. So still not clarity in terms of direction on that, at least for Bitcoin. But at this stage, now we're about almost 7-8 minutes into the presser. There's going to have to be something that he says that the algos don't like to reverse this. Otherwise, they'll keep trying to push this higher.
The other thing too, we have a lot of puts to evaporate by Friday too.
Yeah, it's very negative gamma as well, which is doubly volatile. Powell says we have seen some signs of increased tightness in money markets. Market indicators suggest the quantity of reserves is adequate. That's probably why they're looking at tapering. Fed discussed the review of employment goals at this meeting. What that probably means is at what point do they decide they're going to cut at what unemployment rate? I think that's what that means.
And Doge is doing a hell of a job to help them get there.
Doge needs to go look at the Fannie and Freddie Mac books.
Yeah.
They don't want that. That means they'll have to take more mortgage-backed securities on their balance sheet.
You know, it's pretty wild, Phil, is that we have Elon Musk, who's a known efficiency guy. We have Scott Bessent, who has worked with ironically, Soros as a PE guy, and we have Jerome Powell's a PE guy, and so they have all these operators here that are chomping at the bit here to to kill this federal engine. Yeah, I saw something else yesterday. It was interesting. They're gonna set this sovereign wealth fund up, and they're gonna fund it one way, shape, or form, and they're gonna stick it in the stock market, and so they get a higher yield than what you normally get, and that and reducing price. And April 2nd, they said they're gonna add tariffs that'll take it into the trillions of dollars. Then I think that's their plan to try to balance the budget. I think long term, it's going to support the bond market, and long term, it won't. It will only support certain aspects of the stock market, because they're probably going to only be able to fund the dividend paying companies, not the high flyers out there. They're going to have to be relatively conservative. So I think there might be in the future here, dividend paying stocks are going to probably be very attractive to people. SPY keeps moving up.
It actually is pulling back and making a lower low.
Oh, I'm looking at 565. You're right. I got to take it off the 4 hour. Hit the top of the range.
Hit the top of the bear flag too. That's why I was saying up there, the risk reward is to either take profits or go short.
Yeah, if you're day trading, if you're not day trading, I think you're gonna see a release here. Let's look at SVIX. SVIX always kind of gives me a heads up. SVIX keeps slowly grinding higher.
Powell says best case is that inflation will be transitory. Where have we heard that before?
Well, the market liked that conversation.
Will depend on inflation expectations staying anchored. There is inertia in changing forecasts amid high uncertainty. So we're holding over the weekly 50. Haven't made much progress other than holding a pullback to it. So that's got to hold. That low that we just made there at around 57.12, that needs to hold now going forward. Yeah, the inflation base case inflation will be transitory is definitely making the rounds on social media now, because that last time that was uttered, inflation did anything but be transitory. It's been well entrenched. He says there may be a delay in further inflation progress this year. Doesn't sound very transitory, does it?
He's talking out of both sides of his mouth again.
That's crazy. It'll be transitory. We may not make much progress this year. Well, sounds entrenched then. All right, there's a new high. All right, so basically bulls are in control, and unless he says something in the next 10, 20 minutes that freaks out the market, is probably going to sustain. And then once he stops talking, probably just drift into the close. So let's see here. What are my next levels above this? We got 57.30. So yesterday's high was 57.38.25. So that is the level that would be the next point of interest. just marking that off there. Not seeing anything too extreme here on the technicals. Very mild readings. Basically, the 1 minute has been green this entire stretch. So until you start losing the histogram, trend is up. And these -4 readings on the 1 minute have been dip buys. So as I was explaining that earlier, you can see that working out there. So until we see red on the histogram, then this is probably, we just have to assume it's going to continue to dip and make a higher high until we see differently. Bulls don't want to lose the weekly 50 here now. Okay, so that's the basically what we don't want to see to prevent this from rolling over. If we start losing the weekly 50 at this point, undoing this bullish price action, we see the 1 minute turn red. We got to watch for the FOMC announcement level itself. Remember, simply put, after the FOMC announcement, above is bullish, below is bearish, right? So basically, you're looking to buy pullbacks when you're above it, and if we're below it, you're looking to sell rips. And we are at 57.26 and change, 57.27. So in terms of levels here, I got 57.28 as an interim level before that daily high at 57.38. At this point, if 57.28 rejects, then you want to see the daily 9 hold for a technical level, which is down here at 57.21.50. So this little blue area, this blue line, that's what bulls want to hold over now. We have not had a daily close over this daily 9 EMA in many days. It's been very unusual to see the market go that many days without a daily close back over that level. Powell says, on balance, people wrote down similar forecasts to last time. It's hard to know how this is all going to work out. The relationship between survey data and actual economic data hasn't been very tight. That's because survey data is basically pretty bearish. People out of work and having a hard time paying their bills, and the government data is just out to lunch. Powell says cost of waiting given solid economy are still low. Somebody said transitory stagflation, which I actually think that's true. I think you're going to have a transitory time with stagflation, which then rolls into a recession, personally. What else has he said here? Survey data shows a significant rise in uncertainty and downside risks. Those are those consumer confidence reports, I think is what he's referring to. I think it's hilarious that he says inflation is transitory again, and then he says they're not going to make much progress on it this year. It's like, well, what?
It's called the algo walk.
So the 1 minute is all green. It's unicorns and rainbows. See if Bitcoin has any confirmation here. Not much, still under the Monday high. Bitcoin has to get over the Monday high and start doing, basically like the Monday high is like the 200 week or the 50 weekly equivalent in terms of like the level, right, that needs to hold.
So far, both those trades I put on are positive. We look like we're stair stepping on SPY higher. And MicroStrategy is just starting to grind up a little bit more now too. Let's look at the daily here. I have a fib line. My next fib line is at 573.90.
Norman, it's different. It's a different indicator than the worm.
It is. People in the VIP room get it. So if anybody's listening from the ETF room, the VIP room, the difference that you pay is well worth it to you. Better tools, more interaction, more trades.
You're welcome, Mr. Knight. You're welcome, Wesley. What color is his tie? His color, yeah. What color is his tie? It is, I would say it's purple.
It's
purplish.
It's gold for Bitcoin and green for cash.
Yeah, the Russell's been struggling mightily. Really, just not been. Yeah, I thought the Russell would have a much better catch up move, and it just has not done that at all. Yeah, gold's liking it, huh? Gold's been having a good run. One of those few windows in time where you have a few weeks where gold actually outperforms the price of Bitcoin. Wesley, the gap. Let's take a look on the SPX chart because we won't see that on the ES futures. Let's see here. It looks like we're about there. Yep, gap filled. So trend is up by the dip. Gap fill did not reject. I'll mark that off. That's about 6 points lower here. We have another gap to fill up here as well, all the way up at 57.70 on the SPX. That's going to require a move up to the 200-day moving average. So each one of these, basically when we're trading the trend, we're looking for these -4 to +4 rotations. So from the announcement, we had one clean one there. Then we're working on our second clean one here. Bitcoin, and then Bitcoin's now releasing and just about to that previous weekly high. And that's another spot too. Whenever we get to these highs, you have to watch out for some monkey business. You see how they got to the Monday high and then they pulled it back over $1,000, which isn't much in terms of Bitcoin price these days. That used to be a major deal. And then there's a stop. A bunch of stops got hit over the previous weekly high. So on the 1 minute chart, these are volatility ranges that are painted on here. So whenever you're poking out of that, that typically is an area you look for some short-term exhaustion, and then a pullback. And typically you look for a mean reversion move back to the yellow line, which sometimes can step up to meet price. But that once you get over the volatility range, that's a little bit of an extreme move to expect it to sustain unless you're in some kind of like real monster move. But being that we've just been grinding up for the last 24 hours, pretty much one-sidedly, it's hard to sustain those types of moves outside of the volatility range. So, and we're into a previous weekly high, so a lot of times they will trap buyers, breakout buyers there, or grab those stops and then do a quick reversal. Doesn't mean this move is over. It's just that sometimes you get that quick reversal. Powell says recession odds have moved up but are not high. Forecasters have raised their possibility of a recession somewhat. They're kind of backing into that recession talk because prior to that, you know, it was like, oh, there's no recession. They were pretty much not acknowledging that that was a possibility. Whereas now, at least on this press conference, they're talking about it more as a at least as a possibility, or the odds increasing. Powell says if the inflationary impulse goes away on its own, it's not the right thing to tighten policy. The decrease on progress on inflation has been delayed because of tariffs and uncertainty. All right, so this is that previous day high that we were hitting right here. So again, bulls, they're ball to drop. If they trap here and pull back, it's something you have to watch. But right now, everything says go. We've had a green histogram basically since right before the Fed announcement, and it has not turned red at all, which is a pretty long stretch for being on a 1 minute chart, because usually you get some fluctuation on that. So again, very one-sided trade going on here, and we should see higher.
I'm rolling my 565 calls to 568 for those who have been following me. So, and just so you guys know, when you get a big move like this on Wednesday, there tends to be some reversals tomorrow. So I don't intend to hold any of these positions I put on here since we've been talking together to the end of the day. I'm going to guarantee profit. And if tomorrow it gaps and goes again, that's the way it goes. But typically you get a reversal of some sort, even if it's just short-term consolidation. MicroStrategy trade, I'm already up $2,000 on that trade, bought 500 shares. And again, I'm going to start trailing that trade as well. And so since we've been on the call together, guys, I gave you 2 trades that could have made you about $5,000. The annual price to join Trade Genius is between $400 and $1,000 a year. You're welcome.
Not bad at all.
Okay, I'm going to trail stop $1 on this trade, and we'll see where it goes.
BTC is holding over that previous weekly high, so that's looking pretty healthy for a move. Essentially, Bitcoin is looking, I think, you know, we're looking for a rotation back into 100K into the end of the month is ideally what's setting up.
Okay.
At some point, this move will exhaust on Bitcoin. They'll probably pull it back $3-4 grand once it exhausts, because that's been about what the typical pullbacks have been initially. So just bear that in mind. But the show goes on at the moment.
Totally agree. They're squeezing people now pretty hard, guys. if we could dare to dream, if and this market just keeps going up over the next couple of weeks, I'm looking at 591 as probably an exhaustion area on SPY for the deeper rollover. But we shall see.
Yeah. So basically, at this point, unless there's some kind of like he says something wrong, and I will say this for someone who doesn't like inflation and asset prices increasing, Powell, every time he speaks, just about the only time that really wasn't very bullish was when he kind of like laid down the hammer at Jackson Hole a couple years ago. Other than that, like most of his pressers are pretty bullish.
And I am out of my micro strategy at 305.10, and that put me at what kind of profit on this trade? $2,150. And so I've done this trade now. What's today? Wednesday. I've done this every day this week, 500 shares, and probably up $6,000 on it. So,
Nice work.
Thank you. The key is not to be greedy, because this thing can hit you like a baseball bat.
Yeah, that's for sure. All right, so for Bitcoin, previous weekly high, Monday high, and monthly open. Okay. If you're a bull, your job, or the bull's job, is to not lose these levels at this point. Otherwise, you risk trapping this entire area and then running stops back the other way. So,
Right.
and then to the downside, daily open, weekly open, Monday low. That's the key level to. And I know that's $2,000-$3,000 lower, but that's these are the ranges we're dealing with now with Bitcoin. But these are three really key levels now that, in terms of support, you want to see hold for higher. All right, so we'll check back in on that. And again, there's been nothing changing color on the histogram. It's been all green since 5 minutes before the Fed announcement. So total control here by the bulls. We're starting to peek over that bear flag. That's what this line is down here. It's drawn on the daily, but we're peeking over that. So again, over the weekly 50 on the SPX, it's all in the bulls' court now. They just have to defend these support levels.
Yeah. And just so you guys know, I already have 2,000 shares of Misty, and I have Bido and I have Ybit, so I'm not missing any of that action. It's just that MicroStrategy in and of itself is a pretty big lift, and I'd rather just take profit when I can.
Paul says it's hard to say when we'll have a forecast we can trust.
Yeah, the rest of our life.
Difficult to assess inflation impacts of tariffs. Housing services inflation has been behaving well, moving down in a good way. AKA, we like the fact that this housing prices are collapsing.
And they're just beginning, guys. We've been watching our blogs.
Yeah.
So it can get mo-fugly.
Brutal. All right, so so far holding above previous weekly high. Bulls doing their job on Bitcoin, so that looks good. Whenever you see this very like one-sided grind up, all right, that's usually just option derivative driven. Basically, the flow is just basically hog-tied to one side because the hedges are coming off, and so you're getting an unwind. And basically, it's a move that doesn't look very organic, because normally, like what you see here, up and down, up and down, up and down, that is more the nature of the beast, the way it trades. When it starts getting very like contrived looking like this, it doesn't have the ability to move around. It's just this unwind is so strong that it's just keeping a constant bid under it. And so you can simply like hold your nose and enter a trade. Basically, it's just going to keep grinding up like that. Now, We got to watch it when he stops talking. If that comes off, sometimes there is a little bit of a reaction after he's done answering questions. Right now, he's in the Q&A part of his presser.
Yeah. You get the total Powell hangover. And here the thing is, if he runs to the end of the day, then worry about the hangover tomorrow. But like Phil said, today's really a weird week, so I don't know how many of these puts are getting evaporated today, but there could be some follow on tomorrow. But I'd rather just go with the statistics. And Thursday, are usually bearish if Wednesday was good on the Fed when they do the rate meeting.
So I would say this is the release over the weekly 50. We went over yesterday's high, which is this level here at 57.38. So it's clearing these levels. It's not giving them back. It's not trapping, right? These are all the things you'd want to see for continuation. So that being said, 57.55 is a key level. And the reason for that has to do with the options positioning in the market. So we'll watch the reaction there. It's just a level that could potentially push back. If this clears, then we have runway to get to 57.70.
Oh, guys.
And Bitcoin is holding over the previous weekly high.
And SPY is ripping. SPY could hit that 370-390 area today, the way it's moving. So MicroStrategy moved up another $2 since I bailed out on it, but like they say, c'est hasta la vie. Or say la correctly.
We're at this previous high here from March 17th, a couple days ago, right? Monday. We're at that high there. We just took that high. So Monday high. The Monday high has been taken.
Beautiful.
And we'll see if they hold over that. But this is very standard hedge unwinding. Okay, that's all it is. Not so much buying, just hedges coming off, those bearish hedges coming off.
Yeah.
Because they're there for the downside. If the downside doesn't materialize as price comes up, they just unwind it. So it's almost like at least until they're all unwound, you kind of have this positive feedback loop, because the higher price goes, the more those hedges are unwinding. And that's why you're just getting kind of an abnormal looking tape on the S&P 500, because like I said, normally it doesn't look like this. It's more up and down like this stuff back here.
Yeah. And Phil, looking at my portfolio, I'm only down one stock out of everything I own across every portfolio, and it's fiat. Everything else is green.
The positioning here is getting to very extreme levels, though, in terms of the market. The put call ratio is extremely high. Usually at these levels, you tend to see a reaction the other way. So just bear that in mind. The put call ratio intraday is super, super high. I would say probably unsustainably high. So it can still push up, but watch for potential reaction sooner rather than later.
I'm rolling.
Essentially, it's almost like no one's has any puts open, and it's just all call buying going on, intraday 0 DT, 1 DTE stuff. So it's kind of the case of like too many people on one side of the boat. So a lot of times that tends to see some exhaustion. But we could still run up to that level I was calling out earlier, 70, 70, 57.70, which we're just about there. That's a key level. So we'll see if we get a reaction here or not.
Phil, I rolled my SPY calls up to 571s for Friday. And then if we somehow hit 573, I'm out for the day.
Sounds good. Yeah, put call ratio intraday is over 5.
Wow.
That is insanely high.
Yeah, we're getting a squeeze of palooza right here. So it may accelerate into the close too, guys.
Yeah, it would be unusual when a put call ratio over 5 to accelerate. That's usually where you accelerate to. So, but who knows? Maybe they'll break records today.
So we already went back to the future. So, but anyway, manage your positions, guys. You made a lot of money if you followed me, and I intend to bail out. So, if SPY falls below 570, I'll close the trade and consider it good. And so, where am I at right now? That trade to me is up. How much? I'm up $2,723 at the moment. And so, and I'm ready to jump out of the trade. And I'm going to bail out of it right now, guys. Good trade. Thanks for playing. I'll see you guys tomorrow.
How, just answering questions at this point, guys. Tariffs tend to bring growth down and inflation up. Powell commented that they'll stop balance sheet shrinkage once somewhat above the level that is ample. We're still far from that. I think reserves are abundant.
Yeah.
If cut pace of balance sheet runoff means we'll make reductions more slowly, but for longer. So they're slowing the tapering, but they're not getting rid of it. It's just it's gonna help. I guess what it is basically throttling the tapering so they can continue doing it without having to do anything drastic in terms of like, they don't want to stop it. So they're kind of looking at how things are reacting economically and trying to find a happy balance with the rate so they can keep it ongoing, basically. So not so much we're going to get rid of it versus, well, we're going to slow it down a bit, but we don't want to get rid of it. That's why we're slowing it down. Powell asked if Fed might cut rates in May. He says we're not going to be in any hurry to move on rate cuts. And that's what I was saying. You're probably looking at late Q3 and Q4 for those two cuts. But if unemployment doesn't jump up, they'll be happy to sit on those rates the way they are.
1 to 2 million people are going to lose their jobs over the next 6 months.
So like I was saying earlier, guys, that put call ratio was really, really high going into that technical 57.70 level, right? And we've shaved off a few points since then.
Yep. And I'm out.
That was that was a nice trade up there. That's a pretty decent amount of meat off the bone on that move. Good enough. Good enough.
What I hope happens is that we go down tomorrow, we're flat Friday, we're flat Monday, and then Tuesday we start the April bull move for the next 6 weeks.
Yeah. Yeah. What's going to be really interesting about that, because I generally agree, is going to be how much of that all-time high, or at least the move down from the all-time high, this 10% correction that we've got, how much of that do we claw back? Because if we don't get back to new all-time highs and all we do is get to maybe the 50% retrace or the 618 fib or the 786 fib on the way back up, and all we do is put in a lower high, I mean, that is that is just a giant red flag because that's how your bear markets usually begin. Then we have to watch the yield curve too, because if the yield curve starts to pick up, right? We have that threshold we haven't hit yet, but if that yield curve, hits that 0.6 on the 2-year and the 10-year, that yield curve, then I think this is the chart for that. Yeah. So basically, we uninverted, right? The recession threshold is 0.6% on the yield curve. So we were making progress. This green is kind of like a projection based on the last time yields normalized. And we were kind of tracking it, but we've lagged a bit here, right? Normally, had we had normalized as quickly as we did last time, we would have been over that recession threshold. So there's still some runway, but if this starts cranking up, once we get past that 0.6, you really can't be that bullish anymore in the market. Like the runway for going up basically gets closed. So, and then down here, you're looking at what potentially could play out, and that's where this projects a move down to towards 3,000, and that's where that 200 or that monthly 200 moving average. It's moving up, so where we meet with it, maybe it's a little bit north of 3,000, but that's the risk that we have here in the market. Powell says, I don't think I see a reason to think that we are looking at a replay of the 70s. Well, guys, welcome to the 70s. The underlying inflation before tariffs was basically 2.5%. So, essentially you had sticky inflation because anything above 2.5 or higher is really sticky. And now he's saying, well, tariffs are going to make that, worse. So, like I said, unless the core PCE number gets between 1% and 2%, and basically what he's saying today is that's not happening this year, okay? Unless we see some serious deflation, which, barring a dramatic thing happening globally, probably we're just not going to see it. So I highly doubt we're going to see any kind of QE this year at all. And you get 2 rate cuts. So if we start rolling over and it's somewhat, kind of a moderate market decline, this can easily bleed out into late 2026 if things continue to go the way they're going. BTC is still holding above the previous weekly high. So basically it's all in the bull's court as well over there in Bitcoin land. Hold over that weekly high. If not, you trap everybody here, right? And then you start running stops back below. If they do that, you kind of want to see Monday high hold. That's a key level. So we'll see how that plays out as things progress here into the close. Powell says the Fed staff forecasts assume full tariff retaliation. That's fairly significant. Bob, you got a dog over there?
Yeah, he's right. My wife just came home. I'll put on mute. It's just they don't know that I'm on a call.
Silly dogs.
This is a complainer dog. This is a dog that's owned by a Marine, and I don't know what the problem was. The training was insufficient.
So if we lose 57.55 here, we'll start losing some of the 0 DTE support, and we could potentially see a bigger pullback here. So 57.50. So basically between the resistance is 57.70 for this area up here. Support is 57.55. That level basically dictates how we probably push into the close. Below 55, we go back down. above 70, squeeze into the close. We got about 40 minutes until the cash session bell rings. And Bitcoin's just consolidating over the previous weekly high, which is bullish as long as that holds. Cracking back below it probably will run some stops back down the other way. As you can see, the histogram got turned yellow. When it turns yellow, that means the trend is extreme. Doesn't necessarily mean it's going to die, but you start making sure you're not, that's not an ideal place to buy, because a lot of times the trend will exhaust after you start seeing these yellow indications. Like back here to the downside, you get the yellow indication, and then ultimately it turned. So it's not a place you want to pile in necessarily. Here's a little bit more. Now we lost that level. Remember I said 57, 55. So we lost that. You have to get that back to climb, to try and climb back up to get back to the highs. Otherwise, we'll see some of this unwind get eaten back. You can see the tape's a little different too here, right? We're getting a little bit more two-way action versus this really tight walk up. Okay, so probably right into that level there is where those hedges were, basically the unwind of those hedges had stopped. So prices has a little more freedom to run around and trade more realistically or more naturally. Sometimes these will dump back rather quickly once the unwind of the hedges is done, because again, that was just a function of, some outside forces that kind of had price corralled. Once that's let go, sometimes that just drops back down to where more natural buying demand, because this isn't really natural buying demand so much as it's short covering, if that makes sense.
Yeah, and if you're ballsy towards the end of the day, if that last 15 minutes is not bullish, you can throw a couple puts on for a pullback tomorrow, because this is a big move. It's going to get absorbed some. But don't do it too early, because we still could squeeze in the next 15 to 20 minutes.
Correct. Yep. So I think the most interesting thing this afternoon was that they basically were looking for full tariff retaliation. So that's going to tell you that there's going to be a lot of volatility yet in the markets. They're definitely, I think what they're saying is inflation is not, we're not winning the battle, and he's blaming the tariff wars on it. I think that's the big takeaway here. And ultimately, that's problematic for the markets. All right, so we're pulling back some more off of the loss of that 55 level. That has to get reclaimed to push back to those highs. But so far, that 57, 70 level has been pretty decent rejection off of that. But I do think that coincided with just that hedge unwind stopping into that level. Maybe that coincided with their level as well in terms of where they were hedged to. So once the hedges basically come off into that level, and then they're done. And now we're getting basically like a lack of bid in the market from that forced move. So in terms of like coming back down here, you want to see basically this 38 level hold. If that holds, we have a chance to see that bounce come back up. For the first time, the histogram is turned red. So we've completely lost the uptrend, at least on the 1 minute chart. And you'll notice the trend change line has been pegged. Right. So normally in an uptrend, as long as we're not running into a resistance level, which is why you want to make sure that you have your, any kind of resistance, some major levels, you want to have those at least know where they are. Because even if a pullback sets up right at -4, it started to go back up, but because we hit that 57, 70 level I called out, it's not an ideal spot because you have a technical level there. So ultimately that snap back up only worked out for a few minutes and then rejected, took out the low, which is basically where you would stop out. And then from that point on, the flows reversed. So now it's red. And technically, if you go up to if the red sustains, you go up to a +4. Let's say you go into that 57, 55 level at a +4. odds are you're probably going to see an initial reaction back down. At this point, though, like I said, bulls want to hold 38. Otherwise, you run the risk of back testing the weekly 50. And at this point, with this push over that, you really don't want to trade back under it. That would be a big failure. And you could actually see, if they do it quick enough, you could actually see a total unwind into the end of the day. So it's that important. Bitcoin's losing the previous weekly high. So the risk there now is like all of these guys that bought the weekly high are trapped, right? And so then stops, they'll have stops under here because they're anticipating maybe a breakout move, and those stops will get hit. So these guys are at risk of being trapped. And then if we don't get some buying pressure back over the weekly high pretty quick, we may see a move back down to the Monday high, which absolutely needs to hold if we want to prevent an unwind. And definitely at this point, you do not want to trade over the monthly open. At back under 84 would not be good. That's too many technical levels to be lost on an aggressive move up. And again, with Bitcoin, the way it moved up from yesterday, you have to keep in mind that if those levels don't hold, it still can turn into a sell the news event because of the way they ran up to it. It was a very one-sided move, which...
Look at MicroStrategy. I bought it at 300. I got out at 305. It went to 307, and now it's at 303. That's why you just can't sit it and quit.
Yeah, it's such a two-way market.
Yeah.
Bob Bruce wants to know if you should close SVIX.
Oh, tell him to close SVIX in about 3 weeks.
That's a longer term trade there, Bruce. Bruce, overnight puts, I kind of agree with Bob. You do have a statistical probability of Thursday being down. And like I said, OPEX week, typically when you go down structurally into OPEX week, you typically make the low for the week on Friday. So I wouldn't bet the farm, but I might bet a couple pigs.
Well, and if Bruce is worried about that kind of Thursday pullback, go ahead and close SVIX, guys. We already made, he bought 1,000 shares. He made $600 already, and you could buy it back on Thursday. That trade's going to pay us for the next 4 to 6 weeks. So it's really up to you how you want to play it.
Marie, all I can say is don't shoot the messenger. I tell you where the spots are, but the market will do what it will do.
Remember, you don't have to sign the package either. You can return to sender. That's what makes the market.
Hey, Goldie. Gold, did you buy any Bitcoin yet?
Everything's pulling back here. But this is good. We didn't want to get too crazy.
Recalcitrant, this is what we do in the VIP room every day.
Every day.
You guys get a little taste. And the more volatile, the better.
And except in the room, you have other traders too that are giving opinions as well.
Yeah, and when things are quiet between volatility, Johan can tell you about his exercise regimen. And no, I was kidding.
His bare feet running in the ice.
His bare feet running in the snow. Yeah, we're coming off about as aggressively as we went back up there. That's not what you want to see, guys, going into the close here.
But it is if you got out of the trade.
I mean, yeah, Bob wrote that up beautifully. Very well done. But I agree, because that was a great spot where he got out, because that put call ratio is just way, 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 way too high. If you ever hear me say put call ratio is at 5 on an intraday basis, you can pretty much either close your trades up or take a short. Pretty good odds it's going to go work in your favor.
Now I'm going to tell you something that can scare the hell out of you guys. This 565.34 on SPY is a minus 236 of the move. And if we close underneath it, that opens the door for a move down, believe it or not.
Yeah, so the histogram now is hanging out in the red neighborhood.
Yep. Here's a pretty good pullback, Philly dog.
Well, I was kind of surprised like, given what he said. I was a little. I mean, obviously the reaction is the reaction. A lot of it has to do with hedging, but on net though, once everything's unhedged and digested, like, basically he's saying we're not going to win the war on inflation this year. We don't really have a good handle on what's going to happen from tariffs, and we expect unemployment to continue to rise. Now, that's not rocket science because obviously there's been a lot of layoffs. But it's not like they're painting a very bullish picture here.
No, what's really weird though is ExxonMobil and XLE are really pumping. So
All right, Powell has finished speaking, guys.
Okay, now it's going to get interesting.
So that's the other thing too is he actually, we were blabbing. He stopped speaking about 5 minutes ago. So that move down started before he stopped talking. So it wasn't because it wasn't because he just immediately stopped talking and they let off all the hedges and then come back down or something like that. That hit that technical level and then pulled back. So this is actually a decent bounce, but in terms of like strength of the bounce, we're looking at a 1 minute chart here. This line here represents the 20 period moving average, and we got the Bollinger Bands around that. Unless you get back above that, though, it tends to be the sell the rips on any little bounces. Now, of course, we're looking at the 1 minute chart because it's a volatile day. That gives you the most detail. Normally, we probably wouldn't be staring at a 1 minute chart.
Yeah, it's weird. My two safety trades, which that's ExxonMobil and Vertex, are both getting bids right now too.
Craig, stocks on the short term, you see this FOMC announcement level, that's what it's all about. If we lose this as we go forward into I don't know if we have enough time to get down there, maybe we do. But if we don't hold this level going into tomorrow, you can watch the futures overnight, right? So if the futures are trading below 56.90, that's a red flag for tomorrow. So I'll leave it at that. And like I said, typically, if the markets are going down into OPEX week, which this is OPEX week, OPEX ends on Friday, that's usually the low for the week is on Friday. So we could pivot out of OPEX. So once this week's out of the way, you can see a bounce after this week, right? But don't be surprised especially if we lose that 56.90 level on the futures overnight, don't be surprised if we end up finishing this move off in the Friday. Even Monday could be hung over from the Friday move down if it plays out that way. And then we get basically a relief rally after that. Yeah, knocking. Give it a try. I mean, there's guys, we got some VIPers here in the chat. They can tell you. They can tell you how much fun it is. All right, so he's done talking. 10-year Treasury yield falls to 4.257%. That means the move in TLT continues. The 10-year Treasury yield is down for a third day in a row. All right, so basically Powell says that they're not sure, which that's what we figured he'd say. He did blame the tariffs a whole bunch on for the uncertainty and for the continued inflation being sticky. QT is going to slow but not go away. I think some people were looking for them to say QT was done. That's not the case, at least not as of today. He said they're just adjusting it so they can continue to taper. So we'll see. But, you know, again, not rocket science. I think the weekly 50 needs to hold. If it does not, then the FOMC announcement level probably is in jeopardy. Because at this point, once you clear that weekly 50, you want to see momentum take you higher, right? So, and this is the weekly 50 on the SPX, which is different than the weekly 50 on the futures. And you got to look at both because both matter. But for example, here on the futures, if you look at the daily chart, shrink this down here, weekly 50 is up here at 58.33. So I don't really like the fact that we came up, took the high from Monday and retreated the way that we did. Now we're trading back even under yesterday's high. To me, I don't like that. Okay. So for me, I'll be watching these levels overnight. And if we do start breaking them down, that might be an excuse to get short going into tomorrow. And if tomorrow's red, I think highly likely that we crescendo into Friday. And that's going to be interesting because, like I said, we're in this bear flag here, right? That means we can fill this out all the way back down, heading back down toward the lows that we saw back on Thursday and even lower. So we got to keep an eye on that. That's the downside risk that we're not out of the woods yet. But once whatever happens here, if we can really start holding and clearing over the weekly 50, and who knows, maybe that just it holds even after today and it holds overnight. That would be very bullish. And then we're probably going to go attack the weekly 50 level up here at 58.35. The 20 period moving average more than likely is going to see some sort of bigger reaction to the downside once we run into it. That's a typical, moving average that tends to reject, especially when there's a prolonged move under it, as we've seen over the last couple of 3 weeks. So ultimately, I think that's the upside objective if we can clear things here over the weekly 50 on the SPX. Otherwise, we run the risk of this bear flag pushing us back down and potentially falling. If we fall out of it, the big level for me at that point will be about 54.70 on the S&P 500 because that is the big point of control for all of 2024. I think we're going to see at least a bounce off of that. If that doesn't hold, then 5,300 is the bigger level where I think we'll see a more sustained bounce. But again, that's if this doesn't hold. So a lot of times you just have to kind of go with an if-then approach on this stuff versus trying to orchestrate or predict exactly how this is all going to play out. Because honestly, at this point, it could go either way. So back to the 1 minute chart. Let's see. We are 338. A lot of times what happens, we call this the 330 round trip. So when 330 rolls around, we put a little marker at price there when it opens. So that's this guy here. We can change the color to, I don't know, let's change it blue or something like that. That's the text. Blue. Okay. So this is your 330 open. A lot of times what happens, you get a move up and back down to it or down and back up to it. So we kind of saw that play out a little bit here. Not a big move though. 10, 11 points. Yeah, it's not bad. Little end of day drift up here. Normally they'll get back to that open. They didn't quite seal the deal there. So basically, because it's so late in the day, 20 minutes left, there's just going to be a lot of end of day positioning for tomorrow. And so hard to predict exactly where this is going to go. Though I will say, if we do get back to that 57.55 level and it does not reject, a good chance you could see a end of day short squeeze to the highs. But we're not anywhere near that at the moment on the 1 minute chart. So we'll deal with that if it does get up there. Look for a rejection or acceptance there. And basically, you've had the hedge unwind. The hedge unwind finished. No bid until we got back into this 57.30 area. And now we're starting to see some positioning into the close. The last 20 minutes of the day is not, unless like we do sometimes we'll play this 330 move, right? Looking for a round trip. Outside of that, though, there's a lot of it is just very noisy. There's we'll stick around till a 4 p.m. cash close, and then we'll call it a day. But the 50 algo is basically a big market order that fires off from various mutual funds and things like that, depending on what the rebalancing requests are during the day from participants. And so when 350 rolls around, we call that the 50 algo. You'll see a jerk one way or the other, and then another one fires off at 355. So we call that the 50 algo and the 55 algo. And we'll see the 50 algo in 10 minutes, see which way they fire it. A lot of times one will fire one way, the other will fire the other way. Or if there's a bigger move on the initial candle, they'll end up reversing it back up and basically canceling out the move. There's all these little games that happen around those at the end of the day.
Hey, Craig Rowland, I'm bullish on energy stocks. Oil may drift down, but they're going to open up more exploration opportunities. So I would say and look, we're in SEI right now, and I think that move's just beginning. It was pretty suppressed. So overall, I'm bullish oil at least into the summertime. I hope that helps. Sorry, I'm just catching up on the comments here. I wasn't that far along.
You're welcome there, Karma. Thanks, John.
Jeff, just SEI. You didn't get back in?
So again, last 20 minutes of the day, there's going to just be, I think, a lot of positioning for what we're going to get going into Friday. It is, because this is the March, it is the quarterly OPEX for individual stocks. And so that's that's going to be a lot of things that are expiring in terms of options and volume. I don't know what the size is. It's probably in the trillions, though. Once that rolls off, things kind of reset, and then hedges have to be reestablished. So during that post-OPEX, normally, if you're going up in OPEX, then that post-OPEX period gets a little soft. But being that we're down in the OPEX, like I said, that tends to see a rotation up the following week more often than not. If we don't, and this market continues to sell downward, we got bigger problems. There's something else brewing, because we're already down from the highs to the low 10%. Normally, you're going to see a pretty sustained bounce off of that for, like Bob was saying, 4 to 6 weeks. And seasonally, going down into the middle or, third week of March, seasonally, more often than not, you tend to see a bounce in April, all the way through April, actually. But, you got to take a look at the macro environment. I would say this year, the macro environment's not like most years. I think it's a little more bearish. The U.S. economy is 70% consumer based, right? Of people consuming things and being entertained. And that the consumer is in a world of hurt right now.
It's 70% consumer and it's 70% service. So think about all the things that you consume as a service that if you lost your job, you won't be consuming. You don't want to be in those industries.
So Bitcoin did lose the previous weekly high. They've clawed back over it. Essentially, Bitcoin's kind of following along with the market here, with the S&P 500, I should say. And there's the rotation back to that 57.55 level. So this is where, you got to watch to see if they're just going to reject it back down. You've noticed these one-sided moves. You see how the move down even was one-sided. They tend to go back and backfill such moves. But this 57.55 level is one that needs to be, they're really going to have to push over that to get that to flip back to support. I think this reaction here down is, we'll see, but my gut tells me that this might be a little bit of a battle to get through this. If not, they're going to probably try to push it back down. And we got the 50 algo will fire in about 4 minutes, and then we'll see where that takes us. Risk would be to come back down to this 330 print down here at 57.32. But homework for everybody, if you're interested, is to watch the futures overnight. So on TradingView, you can type in the ES1 exclamation mark symbol, and that's the futures. That's what trades overnight. And dictates where the market opens at 9:30 a.m. Eastern, because that trades around the clock Monday through Friday. So you can watch the weekly 50, which is 57.10. That's the equivalent level on ES. That's the really important one, in my opinion. I think if we lose that, then we'll definitely get back below the FOMC announcement, and then that's, for us, it's very simple. You're either trading above the FOMC announcement, and you would expect more up. Or if you lose it, then you start going into sell the rip mode. So you see 57.10 broken and or 56.90 basically broken overnight on the futures, then tomorrow might be a little turbulent. Yeah, Knight, I agree. All right, so the 50 algo will fire off here in a couple minutes. We'll watch the wiggle, 50 wiggle. Then we'll wrap this up into the close. Yeah, gold ran pretty good today. Dollar also was down. All right, minus 1 minute to the 50 algo. Basically, if you haven't paid attention to that, you're just going to probably see the 1 minute candle jerk around here. Like I said, if this that rejection from 55, which I thought that was my gut reaction, we'd pull back down. The downside target would be to complete the move back to the 330 print. You see that happen quite often at the end of the day. We call that the 330 round trip. Normally, you'd see it on that move there, come back down and touch it. So it's whenever they leave it open like that, you kind of like, kind of unfinished business. So they may come back down and fill that in.
Oh, that's today. Okay.
So we'll see what direction we get here in 10 seconds. All right. And it's down. You see how they put that big candle down there just instantly? So that's the 50 algo. So we'll see if there's follow through. If it does push down here and gets that 330 open, a lot of times they'll end up coming back to where that 50 algo fired from. Let's see. This 57.38 is a level to contend with. 330 open down here at 57.3225. We'll see if they come back and actually touch it this time. And then if they do touch it, we'll watch for a reversal. If they don't reverse it and just start slicing through it, sometimes you got to watch out going into the close. They can do like what they call an end of day flush. All right, so there's the touch of the 330. So that's done. Round trip completed. This is where it gets interesting. A lot of times they'll reverse this back up to that open. So the fact that we're not getting any relief yet is a little squirrely. I think tonight going into tomorrow, I think the futures are going to let us know whether or not the bulls have cleared us for takeoff, or this was just a little hedge unwind during the FOMC announcement, and then the bearish flows are still dominant, and we start cracking below these levels. So this is where we watch to see a lot of times they'll go back up to that level that we opened from on the 50, which means we would go back up to 44.50 if that's the case. Most days that tends to be what happens. But we have to get back above this 38.25 level. So the next thing that happens is the 55 algo. So 355, this is the Eastern Standard Time. We'll get another algo that fires similar to what we saw there on the 50 algo. And that's in 2.5 minutes. Chewing on that 330 level. So by now we should have seen, if they were going to go back and retrace that 50 algo dump, by now you should have seen a move up to it. Now it is possible that it happens when the 55 fires. If the 55 is red too, doesn't really bode well for the close. More often than not, they fire opposite. So let's say if the 50 algo fires down, the 55 often will fire back up. So it's kind of an outlier when they both fire in the same direction. All right, got one more minute, and we'll see which way the 55 algo fires. That will take us into the close, and we're done. See what Bitcoin's doing here. Bitcoin just kind of hugging that previous weekly high, so I think same thing overnight. You're going to get more information about how this is going to play out in terms of the reaction from today. So you kind of want to see the previous weekly high hold. So if we start drifting under that as we progress through the night session, going into Asia, which starts at 8 p.m. Eastern, that's when the Asian session opens. Going into London, which is right now it's at 4 a.m. Eastern because of the daylight savings change. Normally that's 3 a.m. Well, for 2 weeks, it's off by an hour, so it's 4 a.m. That the London session opens. Those where you can see volume pick back up and then more volatility pick back up, especially in Bitcoin because it's pretty active throughout the night. All right, so 55 algo fired down. That's this red candle here. So you got two of them initially firing in the same direction. If we don't get back to the 50 algo, that's where it started from. You don't see that too often. So that might mean they push us all the way into the close. So I would say all in all, today's reaction is a little inconclusive. True, we're over the weekly 50 and true, we're over the FOMC announcement level, but the way that this is finishing off to me is a little suspect, and I think we might have to watch out for weakness overnight. So this is the FOMC announcement level for tomorrow is the big one. For trading under that tomorrow, I think Thursday and Friday in the week red. But we'll play it as it comes and change our opinions as we get more market information presented. Yeah, kind of lethargic moving to the close, huh, Bob?
Yep. This is good, Doug. We don't want it to run away on us.
Yeah, keep in mind too, like we're still kind of we haven't escaped the bear flag. So that would imply that if we're at the top of the bear flag, we move back to the bottom of the bear flag. So that's where you start looking at last week's lows and things like that are still in play. If we do move back down, 56.50 is a big level. 55.50 is extremely important. If you lose that, then you could potentially see a fairly significant drop. But that's a lot of right now. That's a lot of points below us. So take it level by level. Yeah, so there was no get back to that 50 algo level, which to me is a bit of an outlier. Normally they'll get back to it. So not very strong close in my opinion. And essentially what we did, this shaded area is what we call the initial balance. And I don't know. This doesn't look like what I would look for, like for liftoff. It doesn't look like we got it. This shaded area right here is initial balance. So we did stay above it, like on a session basis. This is, you consider that bullish, but it's like I said, I think it's kind of inconclusive. And a couple more minutes, and then this session is closed. Well, guys, I would like to thank you for joining us today. It was a little less volatile FOMC reaction, but essentially the bulls have the momentum. And like I said, the really important level, in my opinion, would be to hold this 50 weekly average overnight. So that means the futures, you want to see 57.10 hold, and definitely want to see 56.91 hold. That's the FOMC announcement level. Losing that overnight, odds are, doesn't bode well for Thursday and Friday. All right, Bob, any parting words?
No, I think we could probably expect some weakness tomorrow as just a general statistic. And then Friday probably be a big churn fest. And then we're just going to have to see whether or not we start going down and actually do a scare the children move into the end of the month, and then a pretty strong April. Anyway, but thanks, guys. Hope you guys made some money from our conversation. That's why we did it. Sorry about that. My alerts were going off. And if you liked what we do and you're not a client, ask you to join us.
All right, Bob's in alert heaven there.
I know.
All right, guys. Thanks for watching. We will see you
Bye.
guys on the next podcast. And for you VIPers, we'll see you bright and early in the morning.
Yeah.
Thanks for watching, guys. Thanks, Bob.
You're welcome. We'll be bright or early.
Hopefully both.
All right. See you guys. I'm signing off.
Thanks for watching. Take care.